Hello, Baker Economics students. So we are now in week 7, so I want to congratulate everyone. We're almost done with the end of the course. So in terms of this week, you're just going to have your final readings for Chapter 8 and 9. You're going to do the one quiz in my Econ Lab, Chapter 13 quiz, and then also submit your market paper. And I'll try to have everything graded and back by the Tuesday after the course ends. But do appreciate filling out any course evaluation feedback. I always appreciate the feedback. But I want to say that I've enjoyed working with you all over almost this 2 months. We did get to see the vaccine for COVID come into play, and the stock market reach a historic high at 30,000, but still a lot of concerns with unemployment, GDP, and not so much inflation right now, but potential future inflation. But to highlight some of the things you're going to read about this week, first, just chapter 8. You look at how firms raise capital. And first, the textbook talks about the principal agent problem. You know, as investors in companies, either through equity, what we call stocks, or bonds that supply the capital, you can own both the stocks and bonds of a company and own all the capital of the company. But we have secondary markets that, IPO markets that actively trade these securities. But firms have to raise capital, and they hope to raise capital in order to invest in different projects that give them a opportunity cost rate of return. So with that, getting back to the principal agent problem, we hire agents, managers to run the companies, and principal are those that own the bonds and the stocks. So there's always a conflict there, and you hope that you hire managers that are making good decisions that are going to give you a positive return on the investments. And we put different things in place, such as incentives, stock options, and just overall performance. If you're not doing a good job, you're probably not going to be with the company very long. But the objective is to maximize profits, as we learned throughout this course. And some of this may be a review from me from finance, but it's always good to revisit this. You're going to look at the balance sheet, the income statement, statement of cash flows to measure that performance. And then the last part of the chapter, you're going to look at the idea like corporate governance and some of the issues in probably the past 2 decades with corporate governance. We had things like Enron, the subprime crisis, still questions about whether uh, markets, as we looked at last week, evolve to allow competition. Are there companies that are abusing their situation and taking advantage of individuals by charging more than would happen in, let's say, like a perfectly competitive market? But we're always going to have these issues. They're always going to be dealing with. And I remember one of the presidents of Baker years ago. She had a big push about saying, doing good. So yes, I would argue that our capital markets, our economy, has brought a lot of people out of poverty. It can create a lot of wealth and improve better standard of living for everyone, but there are always going to be trade-offs, and that's the one thing we're going to have to always work on to see how we can try to improve the situation for everyone, the net. So now with Chapter 9, one of the ways that markets may have interventions in them is through tariffs, quotas, or voluntary restraint agreements with trade. Now, I'm going to tell you that most economists do not like the idea of tariffs, quotas, voluntary restraint agreements because it only benefits small parties. It doesn't benefit the economy as a whole. We would not get to enjoy the standard of living that we have today without engaging in trade. And it's what's going to be interesting too, and talking about the stock market, is about how are some of these multinational enterprises going to do that Trump is no longer in office? So which companies are going to be benefit from this? Which companies are going to be hurting from this? The politics, and we'll kind of see what happens under the Biden administration. But the main thing that you're going to look at in this chapter is the concept of absolute advantage and comparative advantage. And I like the example they gave on page 293 with China and the United States, production of smartphones and wheat. In the example they give, they point out that China has an absolute advantage in this example. I don't know that they would actually have an advantage in producing wheat, but in the example, they are able to produce more wheat and more smartphones per worker. So they have an absolute advantage. But just because someone has an absolute advantage doesn't mean they should produce all the goods for themselves and keep a closed economy. Because when they look at their opportunity cost between the exchange of how much I have to sacrifice in terms of smartphones to produce a bushel of wheat, or the United States has to think about how many bushels of wheat I have to give up in order to produce a smartphone. Well, doing the math and the ratios on that page, I think it showed like China had to give up 2 smartphones, where the United States had to give up 2 bushels of wheat. So it says, you know what? China, you produce the smartphones. United States, we have a comparative advantage of producing the wheat. China has the comparative advantage of producing smartphones. By engaging in trade, and a suitable trade that would be within that constraints, we can get to a point outside the production possibility curve. So they can and actually enjoy more goods and services than they would if it was a closed economy. So that's the main thing of those 2 chapters. And other than that, that's really just what I wanted to share this week. But do send me an email if you have any questions. Make sure to get that quiz done. I'll get everything graded for week 6 fairly soon. Should have everything graded by Monday and get that posted. But if you want to get the paper in early, get the paper in early. Get that done and maybe enjoy a little bit longer holiday break. I hope you all get to have a little bit more holiday break. I think Baker gives about a 2-week break, if I remember correctly. But otherwise, again, I want to say I really enjoyed working with your cohort. You guys have been a really good cohort. Had some really good forum discussion and got to experience some interesting things happening to economics during our time period. So have a happy holidays, and I look forward to talking to you online. Take care.